Hi, I'm Scott Starratt with Starratt Wealth Management. November was pretty much a period of time when the market tried to determine whether the AI technology trade was going to continue or whether it was going to fizzle out. And during the month, there was lots of news, earnings, etc., that would lead us to believe both things can be true at the same time. And what I mean by that is that we continue to feel that there may be some overcapacity issues, companies overbuilding. And that's very typical during a period of time where cash is cheap and people can borrow money in order to invest in their business. The question is whether they're building too fast. And like I said, for the first part of the month, there was that concern. Towards the end, there was a little bit of a pickup as investors tried to figure out, again, whether companies like Google, which released Gemini 3 during the month, or companies like Meta, which the market continues to question why they're spending so much money on AI, tries to digest the system. And so I think going forward, we remain cautious. We don't feel that there's any real missing out fear in this type of market. We still are very appropriately exposed to stocks. And like I've been saying in the past, one side of the stocks is more technology side, which quite honestly has been reduced significantly over the past few months. And the second side has been the metals and mining trade, gold, precious metals, things like that. Now, during the month of November, that continued to move forward with gold bouncing back a little bit anyway from the lows that we felt during October. And so I think, like I said, going forward and going into the new year, that we still maintain our cautiousness. We still maintain the idea that it's a good idea to have a little bit of cash on the sidelines, or at least being in investments that tend to be a little bit more protection oriented, so that hopefully if the market does drop, that we're in a situation where we have some cash available in order to go shopping. That being said, we don't know if that's going to continue or not. So, like I said, we're still exposed to stocks, and even though it's at a lower amount than we've had probably since 2022, it's still an amount that will allow us to participate on the upside if things do continue. Other than that, that's pretty well it for the month. We spent the second half of November focusing on year end, as we'll continue out through September or through December, going and figuring out, making sure everything's okay on the year end side. Unfortunately, or fortunately, depending on which way you look at it, there's a lot of gains this year, and so there might be some higher tax bills come tax time. But we've worked really hard to try to mitigate that as best we can. So I wanted to take this opportunity on behalf of the team. So Angela, myself, Jim, and Alex, we want to wish everyone a very happy holiday season. We want to thank you for being our clients, or for hopefully being our future clients if you're listening to this. And looking forward to spending a lot of 2026 with you, allowing us to, or trusting us to participate in your transition, whether that's wealth transition into retirement or wealth transition into a legacy situation. We really do appreciate it, and we are going to work really hard in encouraging and ensuring, I should say, that that continues. As always, over the holiday season, we hope that you spend time with your family and that you enjoy the time off if you're going to have some. And finally, if you are talking investments, which is, I know, such an exciting thing to talk about over the Christmas table or over the New Year's revelry, please do reach out if there are any client or any friends or relatives that you think might feel that they need our services. We'd love to sit down with them and discuss things in the new year. But like I said, in the meantime, hope you all have a great holiday season, and we look forward to talking to you early in January.